Are they a good bet? You like cat bonds?
I don't think I'm really qualified to speak on cat bonds, but as far as the S&P is concerned, one thing that we've seen is that relative to some of the other sell-offs that we've seen so far year to date, vol actually remained elevated. The VIX actually remained elevated throughout the month of August and really into the last couple of days. So, what I think this event really signals, both the relief rally on the back of hurricanes not materializing as badly as we thought, and potentially also the, lack of escalation of a North Korea crisis over the weekend. What that potentially means is that we might go back to that extremely low level of vol after this weekend. So I think, as far as kind of the markets being on edge, this may signal the end of that moment.
And what I meant is that obviously not you having to deal with cats, but the idea is, does it talk to the reach for yield and taking on more risk than you should if you're in the market? And especially if you go to your wheelhouse, the S&P, if the VIX does wind up staying low, does that force you to take on more risk that potentially you might not be compensated for?
So what's actually pretty interesting is that I believe, I'm not sure which provider does this, but they essentially look at a number of large pension plans every year and kind of look at their allocations, especially U.S. pension plans, between alternatives, equities, and fixed income. And one thing that I've noticed is that over the last few years, that alternatives allocation, in which cat bonds would probably be categorized, has gone higher and higher and higher. And I think this is true of a lot of institutions that are looking at illiquid assets that have a higher yield at a headline rate, but may actually engender some higher either credit risk or idiosyncratic risk.